Good morning, traders, and welcome to another Flow Show. We write Wednesday, the 14th of May, and wow, what a change in those markets over the past 12, 18 hours. Let's say everything is on the move again. But before we start with our show, let's have a look at what we are still offering to you. Our liberation offer, 40% discount on your monthly subscriptions. A lot of people have joined us since we launched this offer. So I think you should all, with how the markets are moving now, you should all come and join us because there's a lot of like-minded people in there trying to help each other, talking about markets nonstop, giving each other ideas. Not only us in the Forex Analytics crew, but all our friends in our chat rooms are giving us their own opinions, ideas, and we talk about a lot of very interesting stuff. And with the markets being on the move like they are, no time to waste. Come and join us. Right, let's start. I was going to, well, I have actually, for those who will watch the recording, given the title to this flow show today, the $1 trillion day. And that is because we heard yesterday from Trump, his administration, and all the major US CEOs being in the Middle East right now. They made deals that amount to about $1 trillion worth. The wires reported, well, give and take a few hundred billion, perhaps with some deal makers taking their cut. But anyway, it was like a very big show and a big announcement. And that reminded me, as you can see, of this video. It is 40 years old. But for those who have never seen this $1 billion day video, and you are trading in markets now, you should, because it is a gem of what was going on back in the days on SpotFX trading desks. And I'm actually very proud to say, and I'll pop this link in the chat in our chat webinar chat right now, because I really encourage people all to watch this. And as I said, I'm really proud to say that Mr. Richard Hill is an ex-colleague of mine. I used to work for the same bank as he did back in the days, and we even worked together for a while. Really a very special character in markets, an absolutely great trader. And it is worth looking at it just to know how markets were trading back in the days. The volumes were a lot lighter, but still, I mean, if you could trade the markets like he did, you could make a pretty penny even in those days. 40 years. I can't really believe that I was in markets as well those in that time. I joined them a little later, but really, it's a video that you need to watch. Okay. Enough. So I was saying the $1 trillion day. So Trump and his suite of followers and the CEOs of all the major companies, with the emphasis on tech, let's say, and defense, are all in the Middle East. They had a meeting and are meeting again today. They are at some conference over there, and they will continue their trip, I think, to Qatar and the UAE, Abu Dhabi in the upcoming days as well. They are striking really gigantic deals, bilateral deals. Chip deals are being signed, defense deals are being signed, and looking at how the dollar traded over the past 18 hours, we wouldn't have noticed that the US and the Middle East was signing all those bigly and big beautiful big BBDs, big beautiful deals over there. Anyway, we've seen, and that's especially for those in the equity markets, we've seen AMD, Nvidia, all Tesla as well. All those equities have been rocketing as they are signing deals in the Middle East. So this is a story that we need to follow, but um, there is a lot of other stuff going on as well. And I will quickly run through the geopolitical headlines because that is still obviously going on while all the rest of the market is on the move. So first of all, we had Zelensky really wanting to talk to Putin about a ceasefire. Both sides are blaming the other one of not really respecting it, especially Ukraine is saying that Russia is absolutely not respecting anything of the supposed ceasefire. But now the Russian delegation, the Kremlin, actually commented on the report, on this report and on this question by saying that they may actually um, go to Istanbul for the Ukraine peace talks on Thursday. They will make the final decision tonight whether they will be in Istanbul tomorrow to negotiate a ceasefire and an exchange of prisoners. So that would be perhaps an extra mini step in the direction of a potential solution to the Ukraine war, but that situation is still very much up in the air. Another geopolitics, and then we are moving over to China. China is not really happy with the way that the US and the UK are discussing their trade deal because they find that it's specifically aimed at them. And then we are talking about obviously cars and car parts and EV cars, but also steel. And the fact that the US is giving um, priority to the UK is not for the likings of China, and the Chinese officials have been saying that they will defend the Chinese interests, and they could possibly well, take action is perhaps a big word, but at least respond to some of those um, findings that they think which are not really pro them, actually against them. Okay, so that is one thing that we need to keep an eye on for between China and the UK this time. On the other side, they are trying to chat up Australia again, and we've seen it in. I think it's also kind of part of why the Aussie dollar is has been supported and coming back, and it started actually yesterday or in the Asian time zone, but we can also see another reason why the Aussie dollar has been supported through the past couple of sessions, and the wages are still pretty high over there. So that is one thing that the RBA is going to monitor, especially going into their meeting next week on the 20th is the next RBA meeting. But that is, I think, part of the reason why also Aussie has been a bit supported. Um, as I said, I'm going to try to run through stuff, geopolitics, relatively quickly. Staying in China, so they said yesterday that those tariff reductions towards the US are going to have to enter into effect today. They have entered into effect today. And we know that they reduced their tariffs from 34 to 10% on a lot of products. That went into effect today for a period of 90 days. Okay, so that started today. And then over to back into the Middle East then is still not going well between Israel and Hamas. Netanyahu said that he wants to complete the fight against Hamas in the coming days. So he is planning to go full in there against Hamas in the coming days. So that is another one on the side of everything else that is going on that we need to watch, because we know the Middle East is yeah, well, I mean, is on that side of the Middle East that at least it's not a nice picture at all these days, but it could accelerate, escalate over the next couple of days, and then we will see what really happens over there. Moving over to what central banks have been saying yesterday and today. So yesterday we had Bank of England Pill, one of those who voted for a hold. We had Taylor before, voted for the 50 bps cut, and then we had Pill afterwards. And he said that the interest rates may still stay high. He is still scared about second round effects. And we heard from Bank of England's man this morning, pretty much repeating what Pill was saying. And she thinks that the UK labor market is more resilient than expected. So they were probably expecting to lose a lot more jobs than what actually happened. But anyway, she said she's worried that the household inflation expectations have increased. Can't prove her wrong there, I guess, when we look at the prices when we go to the supermarket. And then the funny line there, she said, like, the dollar is still king. Well, we wouldn't notice it from how the dollar behaves today, I would say. So perhaps she needs to revise a little bit what she said about the dollar over there. ECB bots have been speaking as well, and just to name the two latest ones this morning, overnight, Villeroy. He is Idov, obviously, at the ECB, the French ECB member. Villeroy, he still expects another cut into this summer, but Nagel, ECB's Nagel, the Bundesbank representative Nagel, said that he is unsure about what the next move will be. He wants to really see the data, which is where, as we know and as we have spoken about, what a lot of central bankers are still thinking right now, that they need to see data coming out after um, this first round of the tariff saga. They need to see what's going on there. Um, and he is unsure about the next move. He did say though that on the announcement of Liberation Day tariffs, the market or the markets were near a collapse. So meaning they were extremely ready to for them to potentially be called into action because they saw indications that the market was near a collapse. So this is it's backward looking, we know, but just in case this trade war worsens again in the future, just know what was where we were at and where even the ECB thought that we were at. And then one that came out just, I don't know, 20 minutes or 30 minutes before the flow show started is the comment from the South Korean finance ministry saying that they confirm FX talks occurred with the US. Now, as we know that this is important, and I take you back a bit. You remember when the dollar Taiwanese collapsed 4% in one day, when other dollar Asians came down, dollar CNH came down as well. Well, now we have confirmation about South Korea. I think if you look at it as the Asian context, it is quite important, and we have actually seen over the past 12, 15 hours, another leg lower in the dollar. And we had a conversation about that in the chat room. And you also know the way I spoke and the way we spoke about those negotiations, that not a lot was very clear, but there may have been indications. Well, now we are starting to get confirmations. And we think that this has to do with this round of dollar selling as well. The people in the know, we also know that longer termers, as we have seen from several articles, also one out overnight, have not completely shifted yet. That a lot of the moves that we saw at the beginning were fast money, but this I think is quite important. And the moves that we see here and now are likely related to what we see. And then now for something which is a lot closer to the ones that we watch, because I'm sure not many of you are really watching dollar Taiwanese dollar or dollar South Korea, but then think about the dollar yen, because so far the Japanese officials have held the ball back and have not really come across the bridge to give in to any FX demands that Besant and the US may have formulated, even saying that they thought that the market should be moving on the back of fundamentals and not be manipulated. We also know that they intervened, which is a form of manipulation, of course, but when the yen was weakening too much. Well, today, until yesterday afternoon even, we saw all those yen crosses moving higher on the back of the risk. And today, all of a sudden, dollar yen is reacting. We are nearly now three big figures from the highs. I would say something is linked there. We did hear from Kato as well yesterday that he would like to talk to Besant again next week. And as a matter of fact, we're seeing that the dollar yen is coming down. So things may be on the move there. As I've been saying, for as long as they don't give in, perhaps the yen is going to remain on the defensive. The fact that he talks, and thanks to James for posting that article again. I forgot to post it myself, but he is planning to talk to Besant at the G7. I suppose they will have to wait to talk to each other until Besant is done in the Middle East, and also Japanese officials are not going to join the APEC conference this week. So all of that is bringing the conspiracy theory to the fore. So I would be starting now to be extremely careful with the yen, and obviously it can move both ways. But looking at how the dollar in general react, if they would at some stage give in to some of the demands, and we also know that the U.S. administration, Besant included, want to a lower dollar for their exports. Things could finally be on the move again. Okay, so always be careful with what we say and what we think, but I'm saying that things may start to be on the move again. And as you know, my overall bias did not really change. As I've been saying, I was just a bit more careful over the past sessions when the dollar made a comeback. So yesterday, also on Face, I mentioned it that I was quite keen on having a bit of Aussie, a bit of cable in the books. So that is what I have still on right now. Unfortunately, I didn't sell dollar yen, but you can't win them all, as Meatloaf used to say. 2 out of 3 ain't too bad. Right, I think we are done with the geopolitics. A quick word about yesterday's US CPI. Came in a little weaker, wage components a bit stubborn. Was somebody waiting for this trigger, or were more longer term players waiting for this trigger? It would appear so, because this is not the kind of data that, well, some say it may push the Fed into action next month. But I would not think that this sort of data, we are going into the right direction, but we are not collapsing. Okay, but wages are holding up. We know the job situation. I just think it was perhaps the excuse, as I said in the room yesterday, for those who want to get rid of dollars for the more longer term, to start to sell dollars again. It may just have been not the trigger, but the time. The you know, when you're waiting for something, once it's over, then you start to do your business again. So I reckon it may have been because afterwards, first slowly, but then we saw an acceleration on the dollar decline. Okay, so that for the CPI. What's next on the docket? Oh, those European. The whole European thing here. Those CPIs are final numbers. They all came in pretty much as the flash numbers. and so we can move on from those relatively quickly. What's further on the docket? A few the weekly MBA numbers, and then it's going to be very quiet on the data front. We do have more. Actually, Goolsby's or Goolsfool is already on the wires, but we do have a few more Fed speakers. We have the oil inventories coming out. Yesterday, we saw a bit of a build on the APIs where we expected a draw. So that's a bit of a surprise build over there. Let's see what the EIA numbers will show. And we have, for those having Aussie on the books, before the next flow show, we will have the Australian employment report. Okay, so the way Aussie trades, it's probably it's likely going to be an important one as well, especially in mind with the RBA next week in mind as well. Okay, so that's a one to watch as well, and then we will have the UK GDP, but it's still Q1. I would say, I mean, this is now really a rear view mirror watching. Unless we get a really big surprise, I would completely ignore it. I will try to ignore it anyway. I don't think it's really um, a very important set of data right now. Okay, that's it. Let's look at a few rates and what is happening here. Um, we need to talk about euro dollar, okay? And then I'm going to take you to that weekly. I said yesterday that we have this long-term weekly trend line, which has broken on the way up, okay? When we were moving up here in March, we have broken, then we had the big acceleration to 115. Well, this week we retested this trend line and it held. And as I was saying, my bias is still for a lower dollar. This could be good enough, okay, for this lot. I was actually reluctant to really go a very big dollar short, and I repeated that as well in the room this morning because of those mega deals that the US is striking with the Middle East. I thought like perhaps the market is going to take that into account as well. And even though the bias is still there, perhaps it's not going to be as fast. But I think the combination of perhaps those longer termers still having stuff to do, and then what is happening with those Asian currencies as well now is putting the dollar on the back foot again. Now, are we done with everything? We will see what happens in the States, but we know that we had been on the way down, on the way back down from the 115, that this 112.70, 112.20 was a battle zone. Well, we are back in there. If we confirm through 112.70, 112.75, and we are really close now, and US will decide what to do with it. But if we confirm through this 112.70, 75, we can continue higher. It does look like this whole episode here was a retracement. The technicals may be saying so, but also what is happening in the background, or what is happening, the reasons why things are happening are indications that we may still be in the longer term downtrend of the dollar. Keep an eye on what's happening, I would say, especially in this 112.2070, but also 111.80 now, okay? Because it's been a level on the way up and down. We've blocked there for a while as well yesterday. So on the day as well, if you would see a retracement, have a look at what's happening at 111.80, because there on the day, I would say, there may be people either who have missed this move waiting for to get in there, or those who got dragged into this move, the short-term ones having bought too high, capitulate a little bit. But I would rather think the former. I would rather think that any move back into the 111s are going to see potentially buyers there. Ali, you're wondering how long euro dollar can go higher. I mean, I just told you what is moving it higher. About everything that's going on. Perhaps the Russia Ukraine is in the mix, but the U.S. investors aggressively short dollars. No, fast money is short dollars. I would I would I would still argue that the longer term investors are not yet out of all dollar assets, and they will likely never get out of all dollar assets unless something crazy, absolutely crazy happens. They will still keep a part of their assets, but they will and are likely rebalancing. Okay, I would rather call it the big rebalancing than really moving out. Fast money is probably has probably flipped already now, but the long-term investors they are still, I reckon, in rebalancing mode. But how long can it last? Long-term investors, they don't move out of positions overnight. They can take weeks, sometimes even months before they are done. But also, what I think is weighing on the dollar is that Asian markets getting rid of dollars. So I think we could, in time at least, continue to trade. So cable. Pay attention to this level here, 133.60. It held here. As I said, the low 131s. It is important. It held, and then we quite rapidly went through everything. We're already back above 132.60. Euro sterling is correcting a bit. I'll have a look at it, but I think it's more a case of. Yeah, people a bit short euros across the board, perhaps because we see most of the European euro crosses are actually bouncing as well. But back to the cable, 133.60 is your next level here. We tagged it, okay? I think this is the gateway to get back into the 134s. We will see now what the states want to do with it. Here as well, I would argue that any move back could already be 133, but it likely be 133. But I I have let some of my longs go into this move, but I'll be looking to buy back anywhere here. 132.60, 133 the figure. I guess this is now a level where it should be holding, unless we get a real surprise, a dollar revival. But which what is on the cards. As I said, I didn't think it was going to go as fast because of those deals in the Middle East. I'm trying not to forget about all those deals and not to get carried away with positions. So I'm still handling them the way I do. But I think on at least on the day we are going to find bids somewhere around 132.60, 133 the figure. Just reading at the same time what you guys are talking about mainly. Pop, 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 pop. Okay. Yesterday, as we spoke about the dollar Swiss, and the dollar Swiss is one thing that we need to look at. I already said so. We went up to that 38.2 here, failed there, and I said like, watch out if we get back below 84.30. It didn't only get back below 84.30, it really collapsed. It's just the dollar, I think, on the Swissy. If you look at the Euro Swiss, it didn't really move a lot. I mean, to me, and I just repeat what I've been saying, and I've been watching for myself over the many years that I'm trading. It is Euro Swiss is kind of the barometer. Some think it's Swiss yen, but I think Swiss and yen should, in theory, rather move together than against each other, apart from big swings, of course. The dollar, the euro Swiss is the barometer for risk. So this is a dollar move, okay? And we are already trading back at that 83.35. You remember here, the high, the high, the high. then we gapped open low here, and then we spiked higher, and we're already there again. We're turning around. So this is your hinge for the day, I would say. You close below, it's probably going to end up closer to 82.5. If you close above, there is a bit of hope, but look at what the rest of the dollars are doing. If the rest of the dollars are continuing to sell off, think about that euro dollar at 112.70, 80 or so. Think about the cable around 133.60, and then perhaps 133.80, 85 as well. Um, and I'm going to look at the Aussie as well. But if the rest of the dollars continue to sell off, there is a possibility that we are going to go back at least to that 82.5. Okay, unless something really spectacular happens, that risk is getting a big lift where Swiss franc and the yen would weaken. I think in that case, dollar Swiss can rally again, but it's fragile right now. I'm not going to stand in the way of this. Quick look at what's happening on the Aussie. Interesting here is that we are getting to levels. Okay, call it 65, call it 65.15, and then also if you look at it on a bit wider scale, this whole move lower, we're getting closer to the 61.8, which lies around 65.5. As I said, I'm trading it from the positive side, but if ever we get there, I'm going to reassess, okay? Because it's also a high here, relatively speaking, a low there before a bounce. Retested and came back down, retested, came back down, retested, and then we started for a much bigger move lower, 65.5. If we get there, make a note of it. I would say make a note of it. All right. Now, what happens? The market could, could always reverse back, of course. 64.40, 64.30. It's still the same level. If we get back below there, I will need to reassess. I'm let some go like I usually trade on this way up. I was quite fortunate to get rid of some bang on the figure here. And I'm going to watch this level for the intraday and see what to do with the positions. Kiwi about the same, similar kind of picture, but we need to look at the dollar yen. So we had this zone here in the 148. Yesterday I didn't show it because Ryan already showed the levels in the 148, but there is a bit of a zone there in the 148. And I said, like, we should find buyers around 147.25, but we didn't really find anything, and it already started to happen in Asia. That's why I'm saying, like, perhaps this whole Asian thing, Asian players or Asian fund managers, if they are at the start of it, and I'm thinking about big sovereign wealth funds like GIC also, they are always very aware of what's happening in their own zone of the world, but it already broke below 146.35. Should have been a zone of support. It actually showed up. It actually showed up before we got the confirmation of this line that South Korea spoke about effects, and then we broken below. Okay, below here now. So keep an eye on one. Call it 146.25, 146.55, okay? Bit of a 20-30 point zone here that we need to keep an eye on the way back up, okay, in the dollar yen. For as long as we are below, there's a risk that we are going back down in the 145s, 144s. That's the way I updated this morning as well. Bearing in mind with what is happening in Asia, there's a risk that this thing is going lower now. And then, of course, we will be waiting for what is going to happen on those talks between Cato and Besant. There's still a small week away, but in the meantime, obviously, the market is going to move. Okay. WTI grinding lower. Yeah, I have as I was saying yesterday, we continuously find resistance in that zone here, anywhere between 63, 64 and a half, 65. Um, but it's hanging in there right now. Goldman Sachs was out with something saying that they analyzed everything that Trump was saying, and that he would want oil somewhere in the 40 to 50 bucks zone. Now, you have to know, and if you want to know what people in the know think about oil, have a listen or and a watch to the recording of our face show yesterday, because we had Shy Girl there talking about the oil and things like that. And I also did a bit of research, and it seems that depending on the basin where the oil producers are digging or scraping, that they would rather need to be profitable, that they would rather need oil to be in the 60 to 65 bucks zone, and that's exactly where we are. So I'm going to say yes, since actually the start of the Ukrainian war. I mean, our highs have also always been lower, okay, and we are still in the same kind of pattern. But don't forget that we had a big jump from here as well. Now, what's going to happen here, I think, is going to be important, especially for those having played it short, or having had like correlation trades playing short oil. I'd say watch out if we start to break back above 65, because it could be that we are on our way back to above 70. And I'm also thinking about this cooperation with the Middle East. We know that they have given discounts, that they have increased production, but it didn't really show into the latest numbers. So I'd say for now, I'm not abandoning this idea about sell all the rallies on oil, but I'm just going neutral, and I want to see what is happening next. Okay, Nuno, sorry. So that is what I think about oil right now. Can we say we're in downtrend in terms of dollar? Well, I said we're in we're in this move, and I think it can continue this move. Okay, is it going to go to 117? Is it going to go to 120? Everything is possible. Okay, um, know that the US want a lower dollar somewhere as well, but the data, and that's where we have been continue to hammer on. The data will show us. Imagine everybody wants. I mean, they all want a lower dollar. The bias right now is for a lower dollar. But imagine that the data prove us wrong. We've been looking. Analysts have been looking for 2 years now for a dollar recession. Okay, once the Fed started to really push rates higher, the first calls have started. 2024 should have been a year of recession. 2025 is supposed to be a year of recession. We are nearly at the half of the year. The recession is not there yet. Now, bear in mind, I did say at the start of the year, if they played badly, and the risk was really there when on the 2nd of April, I say if they played badly, the dollar is going to get hammered over 2025. And we had a bit of a show there of about what happened. The dollar rallied until Trump's inauguration, and then the party was over, and we started to go lower in the dollar. And I'm just taking the euro dollar as an example. I still think it's not done. But if those data are starting to make us or think, or the analysts lie again, I mean, where's the dollar going to go? Perhaps in when we are 2 months later. I'm not saying right now, because as I said, my bias is still there. But imagine that 2 months later down the road, we don't see uh, overly negative, apart from the Doge numbers, and they should be showing up somewhere August, September or so. So we still maybe have to wait for 3 months. Imagine if we don't get overly negative numbers in the next 3 months. Some people who are really short dollars will have to think again, and this is what we have been doing actually since the pandemic. look at the bond market, look at the equity markets, um, and then look at FX. And if actually FX, once we had the big thing, the big moves on the pandemic, FX has been relatively quiet, right? It's the rest of the markets having moved around a lot. I'm speaking about the longer term moves, okay? But I think providing the numbers in the States turning a bit down and Asians letting their currency perhaps also strengthen versus the dollar, we Trump administration will in part get what they want, but then we have to look at the data again. Yeah, in the end, the data will tell us whether the dollar is going really south, above 120 in euro dollar, for instance, or if it's still only again, and I think we will probably reach there. But if we end there and then we start to stall again, but that is music for later. Right now, I think we are still in the move that we started here. Okay, right. Catherine, hard to read on the footsie. It's one of those that I don't trade, but I will take a look for you. And as you will see, I don't even have the I don't even have the any lines on there. I'm really looking at the S&P, and then the rest I'm trying to figure out what moves could be and where balances and rebalancing can come from. So I'm not really actively trading FTSE nor DAX really, but look, we are here at 78.6. If you look at it, um, where are we? I see the futures are trading 8600. Where is the spot? Oh, we are bang on it. We are bang on it here, right? 8600. That's a level. It's been a level here. It's been a level here. It's been a level here. Now, just in general terms speaking, what we have seen and S&P is coming back now. And I think if you look at all the deals that they are striking, maybe the Nasdaq is going to perform a bigger move. But I would be a bit careful being short American equities. But there's been a rebalancing, right? We had this move down, and then we also there's been a rebalancing between US European equity markets, and I think in parts as well, FTSE included. I think it's also been supported by those UK US deals. But as I've been saying also in the rest, we've done this move now. Now, I would say, what's next? I mean, if you find it difficult to read, it's probably because we are at a level here that has been very actively traded, this zone, Catherine. So I'm not surprised that you find it hard to read right now, because I think a lot of people will be in the same situation as yourself and finding it also a pretty difficult read right now. But again, I'm not trading it actively, so I'm not going to really tell you what I think or what should be done. You can look at it like this as well. We are getting slowly but surely to the pointy end of the triangle. Technicals will tell you that usually we see a pretty hefty move. If US equities continue to rally on the back of what's happening in the Middle East and all those deals, it's probably just going to underpin this, okay? But then note that at the same time we are at relatively important levels, and I don't know where here. Some people were also looking at here. We are at this 59 zone as well, right? Here, here in the S&P, and it could just be enough for right now. And I think here as well, people will try to figure out what the next move will be. Okay, Catherine, I hope I just help you a little bit, but perhaps not. But if sometimes when you're in doubt, know that everybody is okay. And but I think we may be at a bit of a crossroad here, trying to figure out what's going to happen next. And with that, ladies and gentlemen, I'm going to close the show now. Again, remember the things that I've showed, like those big trends and whatever, and bear in mind, just have a really close look at what's happening in Asia, okay? Because they seem to be a real driver of what's going on in markets right now. So keep a close eye on what's going on there, and then listen to what's happening in the Middle East as well, because there's a lot of deals being struck there, and they could actually bring a few flows as well. And I'm especially thinking about equity markets and stuff like that. Alrighty, have a great day, everybody, and we talk again tomorrow. Ryan will be back. Thank you very much.